What's up, everybody? Welcome back to RoyalBluFX. Today, we're going to talk about risk management and how to utilize this one little trick of risk management that I've been using for a long time right now. And I'm pretty sure it's going to be very helpful for you too. So without further ado, let's begin. So I don't know how you guys do risk management, but I do it entirely different. This was all built based around my sort of theory and sort of psychology behind this risk management theory that I'm about to show you guys. But a lot of the times, a lot of people don't use risk management, or at least 97% of people that trade don't use risk management. And most of the time when people take trades, they don't use risk at all, the risk management tool at all. I am going to talk about the risk management tool today, in particularly just the risk management tool today. This is one of the tricks that I've used a lot. Now, some of you may know this tool, some of you may not, but the way I use it is essentially when I'm on the higher time frame, like this. Let's just say, for example, I always look for a break structure, like here, for example, right? Then I wait for the market to come back to an order block, like so here. And then once the market comes and taps my order block, I then scale down all the way down to my lower time frame. So, and I know most of you, whenever you find your order block or what have you, some of you may scale down, some of you may not, but in my terms or in my theory, it's always good to scale down to the lowest of the lowest time frames, because that's where you're going to be minimizing your risk. So a lot of this is we're going to be talking about, it's really just minimizing risk, how to minimize risk to and then to reap the rewards and gain a huge reward in the market, right? So whenever we get to the lower time frame like this, let's say the 15-minute time frame, I wouldn't just enter the market immediately as soon as the market touches the order block like this, because this is just nonsense. We don't know whether the market is going to be going down, right? Nothing's confirmed. Whenever the market touches the order block, nothing is confirmed if the market's going to ever respect the order block and then continue down, right? It may sometimes just break the order block and continue. So this is why it's dangerous to take trades right off of, higher time frame order blocks as soon as the market touches an order block, because again, we don't know if the market's going to hold, if the order block is going to hold the market up here. So instead, what I do is I wait patiently for the market to show me a sign of a reversal, okay? So if you look at here, for example, let's cut this out here. If you look at here, for example, let's go on the higher time frame again. Notice how big my my zone is right here, my order block zone, right? Notice how big that is. And some people may just, come down here like this, right, on the smaller time frame, and then start to put the risk just like this, right? Well, there's a problem to this. There's a huge problem to this, because, and the problem is, you're risking way too many pips than you should, and right here we're risking what, 22 pips. But my whole objective here is to minimize the risk, whenever I trade. So, and to minimize the risk, that means I'm going to lose little to nothing compared to other people who, accept this huge risk, or, don't really know how to control risk like this. So what my objective is to minimize risk and to gain more profit in the market. So as you guys know, this will be my destination here, right? Because we always do from the current high to the current low. We never go anything past this because we're unsure of where the market's going to go past this, right? So so my destination is always the next low or the current low. So right here, what I would do is when I scale from the 4-hour to the 15-minute, I'm going to wait for a sign where the market gives me, and I have plenty of signs that I'm looking for in terms of entries, but one of them is called the CHACH, or the change of character, is how we like to call it. So the change of character, I did a video on this a couple of weeks ago. You guys can check it out. But essentially is I'd use a change of character and I'd wait for a break of structure first. And that would signify to me if the market's reversing or not, if the market is starting to become bearish, okay? Because before, just notice, if I was to enter here right now, there's no knowing whether the market's going to, no knowing if the market's going to continue down. As far as I'm aware, the market's bullish, as you see here, right? It's just going higher highs, higher lows, and higher highs and higher lows. So it's a bad idea to start taking sells immediately. So what I would do is, again, just wait for the market to give me a break of structure like this. Okay, and once I have a confirmed break of structure, this already tells me that the market already wants to go down. All right, so now where does my risk to reward tool come into play? Well, I'm going to show you. So we'll look at this huge order block here, this huge order block zone here, right? And now I'm going to minimize this to even lower. Now, of course, I'm on the 15-minute right now, but if I could go all the way down to the 1 minute. And I usually enter on my 1 minute. So pretend that the 15-minute is my 1 minute. Because if I go down to 1 minute right now, the trading view is going to hit me out and say, there's no data for saved for the smaller time frame. So just picture that this is the 1 minute. I normally go from the 4-hour all the way down to the 1 minute and enter on the 1 minute to minimize risk. So just for this video, sake of this video, let's just pretend this is a 1 minute. All right, and I then will identify my order block like here. All right, and then I would wait till the market gets up to this order block here. All right, once the market touches this order block, I then take my trade. Okay, so I'm going to be immediately executed. I'm going to be immediately executed in this trade. Now notice how big my risk is. Okay, it's tiny. Look at compared to this risk and this risk. Let's look at how many pips we had here. We have 6.6 pips right here. It says 6.6 pips. But had I had it on this, I would have been risking more, a lot more. Look at that, 20 or just about, let me see, about 21 pips risk. Okay, but just notice how much I reduced the risk to 6.6 or 6.7 or whatever that was. Right there, okay? Now, again, let's just say I was on the 1 minute. The 1 minute would probably look ridiculously small. So in this case, it'd probably be something like this, all the way down. Look at that. This is my order block right here. This is my supply zone right here, right there. So this is my order block right there. So just look at how small this order block is, and how small we reduced our risk. Right there. Now let's look at it. We're risking 1.9 pips. 1.9 pips, guys. And look at what we're targeting. We're targeting 115% on this trade. So obviously, once I take the entry, you just stay in the market until the market hits your TP, right? Now I'm going to show you guys another cool or the theory and the theory behind this and why this works. And why you should trade like this using the risk management is because a lot of the times, again, people don't know how to use their risk correctly, or simply don't know how much they should risk in the market. Okay, I've had a few people that said, well, you know what, as long as you're trading 1%, that's all that counts. The pips don't matter. Well, sorry to burst your bubble, but pips matter in this game a lot, a whole ton. Okay, and 1%, 1% can be anything. I mean, look at this as an example. Let's say this is us. We just took this trade, right? And let's say somebody else took this from here to here, from this big, from this supply area. Okay, and then we both targeted the same target here. Okay. Now, if this market should ever go against us, we're not losing a whole lot, as you guys know, right here. We're only losing a fraction, a tiny little pebble of a pip, right? Compared to this guy here. This guy's losing a ton of money. And the money, if the market goes against him, now you're dead, right? But we wouldn't be suffering and going through all those crazy emotions had we entered like this, had we used our risk correctly. Okay. Yes, we're both still targeting the same target, but eventually at the end of the day, we won't get hurt. We won't get hurt, but this guy would based off of his risk management. So that's why risk management is so important. Utilizing it correctly. I can take as many shots as I possibly can if the market should ever go against me, right? I don't have any fear. Of course, a lot of this also helps you to lose your fear and lose your sense of not wanting to take a trade, because of course a lot of people when they see the market, they fear the market. They fear that they're going to lose, right? I mean, that's the whole point of this market is to actually make money. We want to make money. We don't want to lose money, right? So how can we control our losses? Well, by simply reducing the risk. And I see a lot of people, going from the 4 hour to the 1 hour and then entering on maybe on the 20, the 30 minute or the 15 minute or whatever. But you still have more risk, even if you're taking the trade on the 15 minute, right? But let's just say for our sake, this is the 1 minute. But this is why I encourage everyone to do this, is to understand that the lower the time frame, the lesser pips you're going to be risking. The higher the time frame, the more of the pips you're going to risk. So this comes in confluence, the risk to reward tool, or the risk that we're using here comes in confluence with all time frames, of course, but in particularly the 1 minute. It helps us understand that we don't have to be afraid anymore. Okay, we can take as many shots as we possibly can, because the market's never 100% correct, right? It's always going to be some losses and some wins, but you're playing your odds against yourself here. Okay, if you're using the the proper risk. So let me go show you guys another example so you guys can see what I'm talking about. I mean, this can be done all across any charts, obviously, but just going to show you guys a few more examples here. Okay, let's go here. Right here. Okay, this is another great example. So whenever I'm looking for a trade, we're looking for a break of structure, and we're always going to target the current high or the current low of the market, because we have somewhat of a guarantee that the price is still going to rise and touch the high of this. Nothing above this is guaranteed, so therefore we're not going to target anything above us, right? So once the market touches our order block, we're going to go, let's pretend again this is the 1 minute, right? This is the 15 minute. We're going to go all the way down, right? And then we're going to wait for the market to obviously touch our order block or order block zone, and then wait for some evidence for us for a reversal, because right now the market is bearish, as you can see, right? Nothing in the market saying it's bullish at the moment. We're looking for either a chotch, as I've explained, right here. There's a perfect example of a chotch right there. And we're going to look for the market to pull back. And then we're going to look for us to have this as a footprint. Okay, right there. Then we're going to look to enter. Now let's look at this. Notice how my risk is so tiny compared to this big block here, like this. Okay, where most people would do. And a lot of people at times also, when you've probably been taught, where you would take your risk and you would go right below a low or above a high, right? Just to make sure so that the market doesn't, hit you out like this right here. Okay. So a lot of people do that, right? But look at the drastic measures you're going through here. I mean, sure, okay, just look at this area here, how you would have been tagged out regardless, right? But the smart way of trading and the smart way of doing risk to reward is the way we do it, like this. Now you're risking only 5.5 pips. Okay. The highest pips, the most pips I've ever taken is 5 at most. Okay, and as little as probably a pip and a half. All right. And let's look at the target. We're targeting 23.1% on this trade, right? So eventually, you just trust in the process, right? And then hit your TP. But more importantly, really believe in utilize your risk very well, because a whole lot of this game is really just risk management, and that's it. It's just using risk. Okay. We've had also other people where they mentioned that pips don't matter as much as the 1% risk, right? Well, 1% can be anything, right? Like here, for example, this is 1% for this person, right? Whoever's taking this trade, and this is 1% for us. So that's why the 1% rule doesn't always mean that just because you're taking a 1% trade, 1% risk right here, doesn't necessarily mean you are actually taking the better part of the pips side, if that makes any sense. Like, you have to match both the percentage and the pip amount, okay? Because pips play a heavy game into this. The pips play a heavy rule in this game, and so that's why we utilize pips a lot, all the time. So without the pips, we wouldn't even, you just be risking. You wouldn't know how much you would be risking, right? You would just be risking 1%. Well, sometimes, and I also do this other trick too, by the way. I also use the 50% rule. So let's just say when price gets to our order block here, I would also, if I didn't want to use this entire order block range, I would split the order block in half like this. Now I'm using this 50% rule, where only when if the market is above my 50% line here, I will enter the markets. Okay. And I wouldn't have to risk a whole lot. So I would do this, like this. Okay. Now I'm risking less. Let's look at what we had. We had 5%, right? This is 2.3% now. We've reduced our risk to 2.5 more pips. Okay. You see the difference between this and this? This is a game changer, guys. Like, it's the best thing that I feel like this ever happened to me in terms of risk management. Now I can take as many shots as I want and really take control over the markets in terms of profits. Okay, because that's what we're all in this game for, right? Is to make money, not to lose a lot of money. So try this at home and let me know what you guys think. Comment down in the section below, like and subscribe to this video, and we'll see you guys in the next video.